Hello, everybody. It's 1 o'clock. I wanted to get started here on time. I know everybody's had a busy day and expecting a busy afternoon going forward. So my name is Darcy Marud. I'm the President and Chief Executive Officer of Western Exploration. I want to thank everybody for taking some time out of your busy schedule today to join for our webinar. I think it's important for us to be constantly in communication with all the stakeholders of our company. So this year we made the decision that we would be hosting quarterly webinars. We had our first one in late February, February 26th. And we're hosting the second one to really update everybody on where we are with progress on our exploration program that will be commencing shortly, and also on a summary of the new technical report that came out that highlighted the resource at Doby George, Gravel Creek and Wood Gulch, and the PEA at Doby George. So I'm not going to go through a full corporate presentation, but I want to hit the highlights for everybody and really give people the opportunity to ask any questions they may have about the company, about what we're up to, what we're going to be planning going forward. And we'll have ample time at the end of this presentation to do that. So I'm just going to jump into a presentation about the company. I think, you know, everybody knows where we're located. We're exploring the Aura project in northern Nevada. It is a project that we've had since the late 90s. It started out as just the Doby George project. Then we added Wood Gulch. Then we made the discovery of Gravel Creek, and that culminates with the Aura project that we have today that has those three different assets on it. Cautionary notes, of course. So the opportunity we present here at Western Exploration, I think we've been consistent in this, is that we're looking at three value-creating projects in one. We kind of combined Wood Gulch and Gravel Creek because during the last 12-month period, we really learned that they are part of the same large epithermal system, and at some point might even connect together. Starting with Doby George, it is a 1 gram per ton oxide heap leach. That 1 gram per ton is what's been identified in our PEA as the actual mine grade. And it can generate over $100 million of operating cash flow annually. And that is based on that high grade and the operating costs that we've gotten through our PEA, and we'll detail that here in the presentation. And then the Wood Gulch and Gravel Creek projects is a large preserved epithermal system. It's gone unnoticed in Nevada for a long time because it is occurring in rocks that typically haven't been explored for epithermal deposits in Nevada. It was the discovery and the mining of Wood Gulch by Homestake in the 80s that led to the discovery of Gravel Creek in the mid-2000s. And it's part of that large epithermal system that we'll be talking about going forward. Currently, we have a resource there at Gravel Creek and Wood Gulch that exceeds 1 million ounces of gold equivalent, and that's made up of about 900,000 ounces gold, and the rest is silver. That resource continues to grow, and we'll talk a little bit about how we're going to plan on doing that going forward. A little bit about our team. We've all come from Yamana Gold and Meridian Gold. We've worked together in the past in a number of operations and exploration projects that both Yamana and Meridian had. So we're a team that's focused on exploration and taking exploration discoveries into development and ultimately production. We've got some significant discoveries and opportunities under our belt, like El Peñon in Chile, Mercedes in Mexico, and the Odyssey in East Malartic, where both Mark Hawksworth, our VP of Exploration, and I were fortunate enough to work on the Malartic operating team with the Agnico counterparts when we were at Yamana. And of course, we're in Nevada, which is a top mining jurisdiction. Not only are we in Nevada, but we're very close to infrastructure, only 5 kilometers or 3 miles off of paved highway, road and power all within 3 to 4 miles of the project as well. And we're located adjacent the Jarrett Canyon mine of First Majestic. So each one of these is very important, but all together is what it takes to make a successful project. You can have the best project, but if you don't have a top mining jurisdiction and can't permit it, it's hard to create value. Likewise, you can have the best team in the world, but if you don't have the high quality project in the right jurisdiction, it doesn't matter how good your team is, you can't get it across the finish line. We're fortunate enough here at Western Exploration, we've got all of those components in spades, and we think that we've got the opportunity here to create a world-class opportunity going forward. So our strategy as a company, we focus on our strength. So we're a disciplined exploration philosophy based on experience that we've derived over our careers. And we're focusing that core experience on the exploration programs in front of us to allow us to maximize shareholder value. How do we do that? Discover and resource growth. You've seen through our resumes that I just showed you that we've been very successful doing that in the past. We've demonstrated that most recently by announcing a 54% increase to our inferred resources at Gravel Creek. That was based on drilling that was completed in 23 and 24. So very significant increase to that resource basis. And more importantly, it increased the grade on both the silver and gold as well at the same cutoff as we previously done it in 2021. We'll continue to grow resource focused on grade. I think grade is what is missing right now in the current environment. Grade offers margins and significant margins to any gold price. So we're going to focus on the highest grade deposits we can find in the parts of those deposits where we can continue to provide significant grade to the project. We're going to focus on several targets at once. That diversifies our discovery potential and success. We know that on some of these high-grade vein systems, you need a number of structures to be successful, because in the long term, when you take them to development and production, you want to have a variety and a number of different fronts working at the same time to make sure throughput can always meet expectations. And we believe that the potential that we'll talk about today at Gravel Creek highlights a multi-million ounce discovery potential. We're currently at about 1 million ounces, but we think we have a lot of room to grow that going forward. At Doby George, we're focused on the project development there to de-risk that project. We took a big step this year with our PEA. We believe that increased exploration there can add resource and mine life. So we will be looking at how we do that going forward. We're looking at opportunities to minimize capital outlay, increase margins. We've completed the PEA. Now we've got several consultants that will be working with the company on looking at opportunities on how we can properly do the project based on minimizing capital, increasing the margins to the development and to our shareholders. And we believe it's an in-pocket development opportunity going forward. It's been largely de-risked. We're looking at the opportunity now to a pre-feasibility level of study and what we do with that going forward. We do believe that it offers synergies with Gravel Creek. The idea has always been to get the PEA done at Doby George, move towards the pre-feasibility so that permitting could be completed and operations started before we need to develop the Gravel Creek deposit. Thus, the capital generated from Doby George production could be used and transformed right into development capital for Gravel Creek and Wood Gulch. So just a reminder where the Aura project is. You can see it there on the slide in gold. It's just north of Jarrett Canyon, about 25 miles due north. You can see the highway 225 that passes Jarrett Canyon, goes to the community of Mountain City where we have our offices, and then straight down from there to our Aura project. As we said, we've got a lot of infrastructure already in place, paved highway. The power line goes down that access road to the Aura project, and we have permitted water wells already on site. Doby George, Gravel Creek, Wood Gulch, and Saddle are all located on that map for your reference where they are with reference to the rest of the project. And then you can see on the map insert in the upper right where we're located with reference to Midas and the Sleeper project, which we think are direct analogs to the exploration and the deposit style that we've outlined at Gravel Creek. So looking at our growing resource, we're now at 1 million ounces, so that's a significant milestone for us. We've always said strategically for the company, we want to get Gravel Creek to a minimum of 1.5 million ounces, so we're on our way to doing that. If you'll recall our last resource update, we had about 700,000 ounces of gold equivalent. We're now at 1 million, just over, and we believe we're on our way to that 1.5 million. So looking at where that growth came from, the inferred resource at Gravel Creek increased by 56% to 571,000 ounces of gold. The silver resource increased in the inferred category by 83% to 9.7 million ounces. And we had a 9% increase in both gold grade and 28% increase in silver grade. The indicated you can see there, roughly the same as what we had in 2021. And I think that's important to highlight that the focus we've had from 2021 going forward is increasing footprint size of the resource, not upgrading it from inferred to indicated. We're here to make this thing as big as possible, as fast as possible. So when we did this comparison, we did it on the same cutoff grades. So you can see a 3 gram to 3 gram cutoff comparison. I think that's important because a lot of times you can increase things by doing different things with the cutoffs, with recoveries, et cetera. But here it's the same cutoff, 3 grams both years. The recoveries were roughly the same for gold and silver. And the gold and silver ratios in 2021 were 70 to 1. And this year they're 85 to 1. So even a little bit more of a penalty on the silver on the conversion there. So all that considered, we were still able to significantly increase that resource. How? If we look at the slide on the right, you can see the Gravel Creek deposit. It's stratigraphic control in the Frost Creek at the top, and then the fault control below it. That's the result of a remodel program that we started in 2023 by relogging core, going back to the 3D model, that we found that that deposit was largely controlled by that northeast dipping, northwest trending Gravel Creek fault. By modeling it that way, it offered a lot more continuity to mineralization. And then last but not least, the Jarbidge discovery. You can see it there on the right. That is new to the resource this year. That was identified with drilling completed in 23 and 24. So that has never been reported in resource before. And this year it reported about 131 or 130,000 ounces of gold and about 4 million ounces of silver from that new discovery. And the Gravel Creek deposit contributed through that remodel about another 100,000 ounces to the model. So again, a 54% increase in the inferred gold equivalent ounces. Again, that maiden resource at Jarbidge and the remodeling of the Gravel Creek deposit were the most significant contributors to that. It was not based on cutoff grade, not based on recoveries, et cetera. Importantly, and I think we don't emphasize this enough, all of these resources are calculated with a 4-meter minimum width. So we're not really looking to high grade the deposit through restricting the size. The 4-meter minimum width would be, more than adequate for an underground mining scenario. It does incorporate some dilution, especially at the Jarbidge deposit. As we get more holes into Jarbidge, we'll look to narrow that block size at Jarbidge so that we can focus on increasing the grade and reducing the dilution that's incorporated in the model currently. I want to point out the discovery success, and this is really a success of our whole exploration team going all the way back to the mid-2000s. The whole Gravel Creek Jarbidge zone is defined by only 96 drill holes. So it highlights a remarkable success rate in drilling. We do not miss this deposit very much when we're drilling it. We are focusing on the resource growth, as I said earlier. So you'll see us doing wide space step outs. We're not going to be doing 20, 30 meter step outs. I'll give you an example from last year at Jarbidge. Those were 80-meter step outs along strike and up dip, and we were successful in getting that Jarbidge deposit into resource. I want to also mention that all of these deposits are open along strike and down dip. We have not closed them off in any direction. So while we have a well-defined resource here based on only 96 drill holes, additional drilling has the opportunity to continue to grow Gravel Creek and Jarbidge past and beyond what we currently know. So that resource table there is totally updated. You can see now global resources on the project are almost 1.5 million gold equivalent ounces. Significantly, 1.3 million of that comes from the gold component of that resource. So about 1.3 million ounces of gold and about 13, almost 14 million ounces of silver in the current resource. So when we talk about district scale potential, that is important, I think, for the success of any project. And we believe that the district scale potential of Gravel Creek is very significant. This slide that we have here presented, you can see there's 3 major faults there called the Thomasina Fault. In the middle is the Gravel Creek Fault. And then to this bottom is the Northeast Badger Fault. All of those are major fluid pathways for mineralization. What we've realized is where they intersect a northeast trend, and you can see it there represented as those blue triangles, that's a thrust belt. Where those faults intersect that thrust belt is where we're forming deposits. You can see in the upper left, the Wood Gulch deposit, WG. forms in that scenario. The Gravel Creek deposit forms right there, Jarbidge related to it. And we've recently identified, and we talked about this last year, the NEB or the Northeast Badger. Identical geochemical signature on surface. This red shaded area here, that is our surface geochemistry, both rocks and soils. Identical over Jarbidge and Gravel Creek is what we're seeing at Northeast Badger. So we believe we have three major epithermal structures. The Thomasina Fault, which is represented by current resources at Saddle and Wood Gulch and the old Homestake mine at Wood Gulch, and a new discovery that was made by the company back in the mid-2000s. They're represented by HH, which is Hammerhead, where we're getting up to 11 grams per ton at surface, but no drilling on that target at this point. Then the GC Fault, you can see the Gravel Creek deposit and the Jarbidge deposit. We've already said those are wide open for expansion along that Gravel Creek Fault. And then most recently, the Northeast Badger Fault. That has never been drill tested, not at surface, not at depth. So we believe we have three mineralized systems on the Gravel Creek deposit, and we've already got 1 million ounces outlined on only one of them. So what do we do in the short term to grow that? So this year we're focusing our drill program in 2025 on Wood Gulch, which is over there at the Saddle resource. We've got the Gravel Creek resource, you can see there. It is wide open for expansion down dip. In that area where it says the GC Fault, we've got up to 20 grams per ton in the deepest hole and never been followed up. The Jarbidge discovery remains open in every direction. It's only 100 meters away from the Gravel Creek resource, meaning that it could be developed at the same time as Gravel Creek and be part of the same mining operation. And then last but not least, the Wood Gulch that we're talking about right now. That's where we're going to do at least 4,000 meters of drilling this year. We believe it is a direct analog to the Gravel Creek deposit. It's the same rocks, the same age, the same style of mineralization, and remarkably very similar grades, as we'll see here in a second. So that Saddle resource that there is in red, we believe that that's very similar to what we see at the Gravel Creek, that flat-lying part at the top, and that the Gravel Creek fault zone or that feeder structure at Wood Gulch has never been drill tested. There was some drilling done in the past near it that was very anomalous, but never followed up. So by doing this Wood Gulch target, we'd be looking to add a third exploration target to the portfolio of resource potential at Gravel Creek. And the reason for drilling Wood Gulch this year is we can probably do 3 times as many holes as we've done in the past, given that it's shallower. We can do that to start with reverse circulation drilling. And this is already permitted within our plan of operations. So we can get started on that here as soon as mid-July. So we're looking forward to doing the drilling in Wood Gulch, and if successful, we will then have 3 major epithermal systems outlined with drilling and for resource expansion. So this drill program, you can see it here. That section we just looked at is AA prime going from Saddle through Gravel Creek. That pink, the interpreted Frost Creek, that is the major host rock for mineralization at Gravel Creek, and it occurs right in the Thomasina Fault along the length of it. You can see these gray boxes. That is where we're going to drill this year, right below the Wood Gulch and Saddle resource areas. And there's 3 holes that are on there, 355, 360, and 421. Those are all vertical holes that were drilled between 2013 and 2019. They all intersected anomalous to ore grade mineralization without ever crossing the Thomasina feeder zone. You can see WG 355 intersected about 11 gram gold and 100 gram silver as a high result. 360 intersected 1.5 meters of just over 7 grams and 15 silver, and 421, which was drilled further into the footwall, intersected wide zones of about 1 gram per ton gold with anomalous arsenic and antimony. That's very important, as well as arsenic and antimony are the trace element indicators for mineralization at Gravel Creek. They're very evident in this limited drilling that's been completed so far. At Wood Gulch, you'll also see that that small open pit there, 423,000 tons at 3.4 gram per ton gold and 23.7 gram per ton silver. That was mined by Homestake between 1988 and 1991. And that just gives you an indication of the kind of grades that still exist within the Wood Gulch resource and have never been drill tested below that resource. So long term, you can see here the exploration plan that we have. Certainly, we've got the PEA done at Doby George. We've got a mineral resource estimate and advanced drilling ongoing at Gravel Creek, target number 2. And then we've got 3 drill targets ready to go that are all permitted and ready to drill. The Thomasina, which is what we're drilling this year, the Northeast Badger, which we talked about briefly, and the Doby George sulfides, which is target number 5. We don't talk a lot about that, but when you think about Carlin type deposits in Nevada, 90% of the resource that is ultimately mined, whether it be Jarrett Canyon or Gold Strike, et cetera, is in the sulfide zones. The oxides are what you see at surface. It's what you get started with. It's the sulfides that sustain the longevity of the project and really provide all of the ounces going forward. So that target's never been drilled and is currently permitted. Longer term conceptual targets, the gap area between Gravel Creek and Wood Gulch is certainly something we've talked about in the past. There is no drilling in there at this point, so it is of a lower priority until we drill some of these other targets. And then longer term Maggie Summit, target number 7, is currently not permitted for drilling, but has all the geochemistry, geophysics, alteration, and earmarks of another Doby George type system. So a lot of future exploration here that can continue to turn over new opportunities and develop resources going forward. So just to touch a little bit on the Doby George PEA, we announced this in May. It's a very straightforward, simple project. Open pit, crush, stack, ARD. So very common what you would do in Nevada or the Western United States. You can see the outlay of the project here on the right. Very constrained footprint, the pits in pink, the waste dumps just to the south of that, then a convey system to the crushing plant, heap leach, and ultimately the pregnant solution ponds at the bottom of that slide. So it's very small scale as far as footprint goes. 7,500 ton a day, short haulage distances, but it is very productive. It will produce about 60,000 ounces of gold recovered every year. And that gold that we're mining is at an average grade of 1 gram per ton. And that is driving about $75 per ton or $112 million per year operating cash margins at $3,000 gold. The current operating costs per ton of ore are about $22 to $23 per ton in our PEA. And the average gram or the average ton of ore at Doby George at the current gold price or at $3,000 gold price is about $92 per ton. So that gives us our $75 per ton margin. So very significant cash margins here. It's also very high grade when compared to other opportunities, not only in Nevada, but the Western United States. It's in the upper quartile at a gram per ton. And that gram per ton is in pit within the PEA life of mine. So that's not just resource number at this point. You can see on the blue bars are similar open pit heap leach operations. The gray bars are open pit milled operations, so slightly higher cutoff, that's the higher grades. So the economics, we did a base case of 2150 gold, but of course you do your base case at a 3-year trailing average gold price, but you hit it with the current economics. So at a 2150 base case, you can see the economics there. We're going to focus on the 3,000, which is closer to spot, and you can see our average annual operating cash flow of about $112 million a year, an NPV at a 5% discount rate of about $211 million with a 62% rate of return and about a 16-month payback period. So not the largest operation in the world, but significant cash flow can be generated from this operation. The idea here, again, is looking at a project scale development scenario, not just focused on Doby George. Doby George would be the start of the development of Aura that would ultimately lead to Doby George funding the construction and development of Wood Gulch Gravel Creek. That is the philosophy here that we're trying to develop. Enough lead time with Doby George to get it permitted, get it built so that it's generating the cash flow when Gravel Creek and Wood Gulch are going to need it for construction and development. Very short mine life right now, but we do have opportunity to expand that resource, both at Doby George. We're coming up with a drill program to do that shortly. And of course, at Wood Gulch, which is oxide, there's about 100,000 ounces of oxide at Wood Gulch that could ultimately contribute to the Doby George mine life as well. So as we go to the pre-feasibility study, we'll do additional drilling at Doby George before concluding that, and also look at bringing that Wood Gulch resource over to Doby George. Just to kind of the capital structure, I just wanted to highlight this for everybody. After this most recent raise, we've got about 53 million shares in market right now. Our market cap's about $35 million. Institutional shareholders are around 50% of the company. That includes Golconda, who are the founding shareholder of the private equity group that founded the company as a private enterprise. And directors and management in our last financing participated and took about 2.5% of the financing as well. So we do think we have a world-class opportunity here with near-term resource expansion potential. I think we've demonstrated that with our most recent resource update. We've got a high-quality asset. I think we've got 3 areas where we can continue to grow the resource, and not only grow the resource, but high-grade components of it. We have excellent precious metal endowment. If you look at the operations around us with which we compare Jarrett Canyon to the Doby George, Midas, and Sleeper to Gravel Creek, they're all world-class operations. We have the same age rocks, the same geology, the same type of mineral occurrences. What we don't have is the amount of drilling that's been done on those operations to really realize that full potential yet. We are in Nevada, and not only in Nevada, right off of a paved highway just north of Elko, which is one of the major mining centers of North America, if not the world. And we've put a team together here that is very experienced at taking projects right through discovery into development. So that's what we're focused on here, is really this discovery process, growing this resource as fast as possible, that will ultimately allow us to look at a development scenario for not only Doby George, but Gravel Creek and Wood Gulch longer term. We're starting a 4,000 meter drill campaign. I'd highlight that we think is going to be the minimum for the year. It's fully funded at this point. It'll start here in about 2 to 3 weeks. The drill contract has been let. We'll start on road work to get the drill in there very shortly. And we're looking forward to a very successful drill campaign and getting results to market starting as early as September all the way through to November. So that's the presentation that I wanted to share with everybody. And at that point, I'd be very happy to open it up to any questions that anybody might have. And I'll look forward to your questions and some good feedback. So the first question I see here, it says anonymous attendee, is what needs to be done before another resource update at Gravel Creek is released? That's a good question. Certainly, if we're successful at the Wood Gulch this year, that will speed up the resource process. I think at Gravel Creek and Wood Gulch, or at Gravel Creek and Jarbidge, any drilling that is done there that is extensions of that deposit could be immediately added to the resource. So I think the next resource update would probably require about a 10,000 meter drill program. That's currently not in the treasury to do that, but we'll start with the Wood Gulch drilling, and certainly with success, we'll look to carry that going further. What is the estimated cost for Doby George permitting stage to arrive at a feasibility level? Right now, that is at about, last estimate was about $2 million. I think that is actually in the technical report as an update, but that is the last estimate that we had. I see a question here. What is the potential of the Jarbidge zone in terms of ounces and grade? What is the target? We don't know yet. What I can say is right now we have about just over 200,000 ounces outlined in there. We do think that thing can grow. The northernmost hole, which was hole 417, intersected 3 meters of 41 gram per ton gold equivalent. That is not closed off in any direction, remains open. And to the south, we drilled hole 458 last year, where we had 4 zones, narrower, but the widest zone had about 17 gram per ton gold equivalent, and that has not been closed off. So we've always thought that Jarbidge, if it held together, could give us, close to 1 million ounce potential on its own based on grade. Talking about Jarbidge a little bit, we're looking right now at a scenario at Jarbidge where the average grade is probably 7 to 8 gram per ton gold equivalent. But remember, that's diluted to a 4 meter width in those blocks. So there's the opportunity as we get more drill holes in Jarbidge to increase that grade by minimizing the dilution to maybe a 2 to 3 meter block grade. Next question, how far away are we from seeing a PEA or PFS that wraps all the targets into the enlarged Aura project? Boy, that's a really good question. And I would say That is probably 2 years away. Again, based on drilling success this year, we might accelerate that, but right now, my best guess for a PEA at the entire Aura project would be about 24 months. The next question I see here, how does the updated mineral resource estimate at Gravel Creek and Wood Gulch influence the broader development strategy for the Aura project? Well, I think it convinces us that our exploration has been very successful, that we found a major mineral system at Gravel Creek that we think can continue to grow. Certainly with Wood Gulch this year, if we're successful there, that will even increase our enthusiasm. So I think the updated MRI just gives us more confidence that our model is right, that the system does have significant strength and breadth, and that additional drilling will certainly have the opportunity to add additional resources, not only at what we currently know as extensions, but at new areas like the Northeast Badger, the Hammerhead, and Wood Gulch. When do we expect to have drill results for Tomasina? I think I mentioned probably starting to see results in September. I would say probably early September, right through to the end of October, to the end of November, again, depending on how much drilling we keep going here. Next question, with the Jarbidge zone only tested by 19 holes, what's the scale of the opportunity there? How much drilling would be needed to define the system more robustly? And again, as we look at how we want to do this, I think it's important to realize that we're not going to be focused on getting it into the indicated or measured category. Our focus over the next at least 2 drill programs is going to be on expanding the footprint, right? So we won't be doing tight drilling. So every drill step out that we do is going to be done to add incremental tons and ounces to the current resource. So the drilling, I think, that would be needed there. Again, we don't know the limits of it at this point, but I would estimate, and we've looked at a budget of about 10,000 meters at Jarbidge to really understand how big this deposit can get. The next question, what would you say differentiates Western exploration from other junior explorers in Nevada right now? Good question. You know, I don't speak for other companies. I think if you look at the number of companies that are active in Nevada right now, there are a lot of really high quality companies and good projects coming out of Nevada. I think part of what's going on in the junior market is there's just so much and so many opportunities that it's competition for capital and competition for attention. What differentiates us maybe a little bit from other companies is the breadth of our team. I mean, we all come from major mining companies that have focused on really making discoveries and taking them into mine development. So we're not the kind of company that's going to really be that promotional on drill results, et cetera. We're going to hit milestones. We're going to look and we're going to try focus on doing what we say and saying what we do. So, you know, we're taking this in a sequential process where we wanted to get Doby George into a PEA. We've done that. We wanted to get a resource update with Gravel Creek. We've done that. I think those are the building blocks. The next thing for us is the PFS at Doby George, and then continuing to grow that resource at Wood Gulch, Gravel Creek. So I think if there was something that would differentiate us, is just that we'll be very methodical about how we do things and kind of apply what we've learned from our days at Meridian, Argonaut, and Yamana to really approach this like a major company that we're ultimately going to want to build this and develop it. I see a question here. What are your costs per meter to drill? Good question. They were less last year than the year before, but it's still quite expensive compared to what it has been historically. And I would say our average diamond drill cost right now, all included, are about $700 per meter. Reverse circulation costs, all included, are probably about half that. Again, there's variability on that, again, depending on the size of your program and what kind of drill you're doing, but those would be rough estimates of the cost at this point. What other key milestones investors should watch for in the next 6 to 12 months? I think the next milestones are really going to be driven by drill success. If we're successful at Wood Gulch, I would look for us to significantly increase that program with 2 or 3 additional drills, maybe even 4 drills. We know that Gravel Creek and Jarbidge remain open for expansion. We have not programmed any drilling there yet because we wanted to get that new model and new resource done before we did that. Now that it's done, we will come up with a program to extend that resource. We've got the program at Wood Gulch going. We're only drilling 1 kilometer of strike length on a 3-kilometer target. So there's additional drilling that can go on there. And certainly we just talked about Doby George that we think we can grow that resource. So I think milestones for us are going to be drilling success. How much drill meters can we get done to continue to grow that resource? So I would look, for the drill results coming from Wood Gulch, like we said in September, but also between now and then, look for some updates on the company on where we think we can add additional drill rigs to continue to grow the resource at both Jarbidge and Jarbidge and Gravel Creek, and also Doby George. I don't see any other questions, but if we have any more, maybe we give it a minute or so. All right, I don't see any other questions. So I wanted to thank everybody for joining us. I see we have 27 participants, so that's a new record for a webinar. I thank you for taking the time out of your schedule. And as always, we do pride ourselves in being very open and very transparent about what we're doing and how we're doing it. So if you need a one-on-one with me, I'm always available. Please don't hesitate to call me directly or through Nicole, and we'd be happy to continue a conversation on any one of the points we've discussed today. So with that, thank you everybody for attending, and I hope you all have a great day, and happy Canada Day to those celebrating Canada Day, and happy July 4th to those celebrating Independence Day in the United States. Thank you very much.